Hi everyone, this is a technical analysis on gold. Let's start with some fundamental background first. Last Friday, gold spiked on both sides after the release of two key economic reports. The US NFP report beat expectations, with the market initially trimming rate cuts expectations and spiking downwards, but after a couple of minutes, the price reversed as the under the hood data wasn't as good as it seemed. Sometime later, we got the release of the ISM Services PMI, and that's where the real shocker came from. Besides the data missing across the board, the employment subindex cratered to levels seen only in the dot-com recession, the global financial crisis, and the COVID recession. This gave a boost to gold, but in a strange move, the price reversed soon after and finished the day lower. In the big picture, the price should keep on trending higher as long as the market continues to price in more and more rate cuts. Now, in the daily chart, we can see that gold has been falling steadily from this 2080 resistance following stronger US data releases. Last Friday, though, we got two weak reports, but the price has not reversed the sell off. From a risk management perspective, the buyers will have a good risk to reward setup around this trend line, where they will also find the 61.8% Fibonacci retracement level for confluence. The sellers, on the other hand, will want to see the price breaking lower to invalidate the bullish setup and extend the drop into the 1972 level. On the 4-hour chart, we can see more clearly the downward spike on the NFP report and the upward spike on the ISM Services PMI release. The sellers lent on this downward trend line to position for a drop into the major upward trend line around the 2010 level. The buyers will need the price to break above this downward trend line to confirm the restart of the uptrend and position for new higher highs. On the 1-hour chart, we can see that the recent price action has been pretty messy and overall range bound. There's no clear level where to lean on except the 61.8% Fibonacci retracement level, the major upward trend line, and the downward trend line. The buyers might want to split their position in half and lean both on the Fibonacci level and the upward trend line. The sellers, on the other hand, should wait for another pullback into this downward trend line before taking new short positions. This week is basically empty on the data front, with the only two notable releases scheduled for Thursday, when we will get the US CPI report and the US jobless claims figures. Strong data is likely to weigh on gold, while weak figures should give it a boost.